an adult, I realized how important it was to understand it, because there's so much jargon. They use a lot of big words in insurance, and it can easily go right over your head. So I'll try to bring the cookies down on the lower shelf. Start real high level and talk about what is insurance and what is risk management, what is risk even, and try to build it up from there so you guys have at least a basic understanding. So I'm going to go ahead and share my screen. See if I got a little PowerPoint I just threw together. Where is it? Here we go. All right. So can you see that? Is that a yes? Thumbs up?
Yes, we can see it. Well, I can see it.
Okay. So it should say Personal Risk Management Insurance 101, Farmers Insurance. Got a picture of me all suited up in my monkey suit. So anyway, yeah, introduction. So I have my own farmers insurance agency. I've been doing it about 7 years. This is, I think, like my third or fourth career. Let me jump to the next slide here, and I'll give you a little bit more about myself. So first started insurance back in 2014. I actually had a career as an engineer, and then it was in telecommunications. I was a large business account manager for some of the companies here in town. You may know McKee Foods that makes the Little Debbie snack cakes, and US Express that does all the trucking, and a couple others. But this is me and my family when we first started. And then the picture on the bottom is me and my family actually just last November, my oldest got married. So that's a little bit about me and how long I've been doing this. But even though I've done engineering and telecommunications, this is probably my most rewarding job that I've ever had, just because I get to help people on a daily basis, and I'm just a people person. So that's a little bit about me. So let's talk about risk. What is risk, and why do you even need to manage it? And talk about personal risk versus other types of risk. So the reason it's important to you, we all have personal risk. When I was in corporate America, they had entire divisions that did nothing but risk management for the business to protect them from the what if. But let's talk about what risk is. So the definition of risk is exposure to danger, harm, or loss. So if you guys want to take yourselves off mute, I want to make this conversational, and I'd love to hear from you guys. What can you guys think of some examples of risk? Anybody?
Sure,
all right,
maybe I can think of something.
Maybe this will help. So risk is different than a hazard. Like sometimes people think hazard and risk and they can get them mixed up. So let's talk about what a hazard is. A hazard is like a condition that's causing risk. So let's talk about some examples, and maybe it'll become a little bit more clear. So let's think of hazard versus risk. So I don't know if you can see my cursor here, but let's say a hazard is just a wet floor, right? So the risk of the hazard of a wet floor is that we could slip and fall. So another example, a hazard of just driving a car, right? If we're driving a car, we can get in an accident. All kinds of stuff can happen. You're just driving a car. Let's say that there's a tornado that's in the area. Well, a tornado is not necessarily a risk. It's a hazard that could cause a risk, which would be damage to life and property. Just like smoking is a hazard that can cause lung cancer. So that gives you an idea of what hazards are and risks are. As you guys have probably lived enough life to know that, guess what? There's risks and hazards all around us. Just living, can be, there's a certain inherent risks that things can happen. You probably know people that, have experienced that maybe got hit by the tornado, a year ago at Easter, or that have been in car accidents, or have gotten sick and had to have surgeries, or, whatever. So that stuff happens. So the good news is there's something called insurance that can help protect us against those risks. So the definition of insurance is what we call a transfer of risk. it's a contract. This is, again, a legal definition represented by a policy. You guys have probably heard the term insurance policy, right? In which an individual or entity receives financial protection or reimbursement against losses from an insurance company. So we talked about risks, we talked about hazards. Losses are the actual damages that you would have. So it would be, say, your roof got damaged. So you own a house and your roof gets damaged in a tornado. Well, that roof's got to be replaced. So the losses are the cost that you have to pay to replace that roof, right? Or the house could burn down to the ground, or you can get in a car accident and your car's got to get repaired. So that's what insurance does. It transfers the risk from you to the insurance company, but there's a price for that, right? So you, with the contract with the insurance company, you pay what's called a premium to the insurance company, and in exchange for that premium that you pay, they accept the risk if something happens, so that you're not stuck having to pay, a whole bunch of money that you don't have. Does that make sense? Everybody tracking?
Yes.
Okay. Feel free, if you guys have any questions, go ahead and throw it in the chat box. And then just give me a heads up and I'll be more than happy to stop and answer it. But again, make this conversational. If you have any questions, please feel free to, take yourself off mute and throw it out there. All right, so let's talk about what types of insurance there are out there. So we kind of touched on some of them, right? So you got auto insurance. There's also like insurance for boats or campers or ATVs. There's home insurance, right? Probably one of the biggest investments that anybody will ever make in their lifetime is, insurance, or a home, which is hundreds of thousands of dollars. There's health insurance, right? Well, there's risks against our health. We never know, you could get sick, you could get cancer, you could all kinds of different things. There's life insurance. That becomes really critical if you become a parent, and you have, you're the sole income provider and you have little ones that are depending on you, and God forbid, the worst thing happens and the Lord calls you home, and are you gonna, what's gonna happen to them when you're not there to provide that income? Well, you can actually buy insurance against your life, believe it or not, which is probably one of the most selfless things that you can do, because you're buying something for somebody else. In fact, the quote that I use for life insurance, it says, a society grows great when men or women plant trees under whose shade they know they will never sit. And if you think about that, life insurance is very much, kind of like that, because you're planting a seed for a tree under, you're never going to benefit from it. It's actually for somebody else. And then there's business insurance. If you were to own a business, there's certain risks, to the business that, loss of income. For example, what's a good example? Let's see. Say the business, you're in a strip mall, right? And you have a restaurant, and the business next door catches on fire, and it causes damage to your business, and now you can't be open to serve food and get an income. Well, you can actually insure not only the damages to your place of business, but also the income that was lost while you couldn't operate. So those are just different things. It's really a financial stewardship issue, that the amount of premium that you generally pay to buy the insurance is a lot less expensive than if you had to bear that burden for yourself. So we'll talk through that. Let's what I did was I put together an example. I figure most of you guys, probably the first thing that you're ever going to encounter insurance-wise is probably auto insurance. When you buy a car, you're probably going to buy your first car before you buy your first house. So this is just something I took, and it may be tough to read, so I'll go ahead and read it a little bit. I took a picture. Whoop. Oh, sorry about that. Back up here. This is just a pamphlet. I don't know if you can see this, that I give out to my clients, but it's auto insurance defined. So what is insurance covered? What are some of those risks that you pay that premium for that you're covering? So the first one is probably one of the most critical ones that all of us face, and it's liability for bodily injury. So if any of you guys watch TV at all, especially if you're watching the morning news, like every other commercial is for a personal injury attorney, right? The Warren and Griffins of the world, the Wedemark Keiths, been in a wreck, need a check, right? So that should give you an idea of how litigious, or how sue happy our societies become. So that if we're ever at fault, if we're in an accident and we hurt somebody, and the other people that we hurt get, those attorneys get a hold of those people, they're coming after us for their medical expenses, their lost wages, right? If they say it's a dentist, then he can't, he broke his hand, then he can't be a dentist anymore. Think about that, how much income is lost. What about if there's a fatality? And then the other thing that they can sue you for is loss of enjoyment of life, right? Pain and suffering and loss of enjoyment of life. So those lawsuits can be really, really hefty. I mean, just tracking the data right now, the average lawsuit for those things is over $400,000. So any of y'all have $400,000 just sitting around, in your bank account, right? So that's where insurance comes in, right? You pay a much, much smaller, premium, but God forbid, in the event that something like that happened, the insurance company steps in and they cover that. So that's the difference between, financial ruin and, you going on with your life. So that's probably one of the bigger ones that it covers. The next thing is liability for property damage, right? Say you wreck somebody else's car, you run into somebody else's, fence or even hit their house or something, and you damage their property. Well, again, that can be, tens of thousands of dollars. Again, do we have that laying around? But, instead of having tens of thousands of dollars in the bank, hey, I'm just going to pay $100, $200 a month for my auto insurance, and the insurance company covers the rest. So we're transferring that risk. Right, everybody tracking? Start making sense?
Yes.
All right, so let's talk about another thing that auto insurance covers: medical payments or personal injury protection, sometimes called PIP. So what if you're driving, either you get in an accident or somebody else hits you? Well, if somebody else hits you, their liability should cover it, but that's another coverage we're going to get to. But say you're driving and you have a passenger in the car and they get hurt. Medical payments or personal injury, let me go ahead and read it. It says, if you or your passengers or even a pedestrian is hurt or killed, we'll cover the medical bills and funeral expenses. It may also cover you or a family member who is a passenger injured in someone else's vehicle or a pedestrian struck by a vehicle. So that's another coverage that auto insurance provides. Now, the next two coverages are actually protecting your vehicle. So, cars come in all different shapes and sizes, right? They can be a $5,000 car that, that's used and it's got a ton of miles on it, or it can be a $50,000, Expedition or whatever that's loaded out. And if it gets damaged, either by you hitting something or something else hitting you, you want to make sure that it can be repaired. So there's two different kinds of coverage that protect your vehicle. One is collision, and that's if you hit something else, right? So that's if you hit a tree, you hit a fence, you hit somebody else's car. This is coverage to repair your vehicle, not theirs, right? Because that's covered, their repairing their vehicle is the liability for property damage. But this is to protect your vehicle. So generally, with insurance, there's what's something called a deductible. Anybody heard of the word deductible? So what a deductible is okay, we're throwing out a bunch of jargon again. Premium is the amount of money that you pay the insurance company to provide the insurance, right? Say you get in a wreck and you got to have your car repaired. Well, you don't just go, hey, insurance company, here's the bill. There's something called the deductible. And the way to think of that is it's kind of like it's your skin in the game. to make sure that you're not driving crazy and having accidents all over the place. Because if there was no, if you just paid your premium and then there was no, risk, if you will, to you, people would be having wrecks all over the place going, oh, well, the insurance company is going to pay for it. So what a deductible is, it's saying that, hey, you're on the hook for the first however amount, that whatever that deductible is, whether it's $100, $500, $1,000, before the insurance company starts to pay for your car. So if it's a $20,000 car and you got a $500 deductible and you totaled the car, you're responsible for the first $500 and the insurance company is going to pay the next $19,500. But it just gives the individual some personal responsibility to make sure you're not driving around like, a crazy person. Which brings up another point. Unfortunately, people will ask me all the time, like, why is insurance so expensive? Unfortunately, believe it or not, there are some people out there that will make claims that are not necessarily legitimate. Insurance fraud is a huge issue in the industry, and it costs all of us more money in higher premiums. So, there are people that will say, that their car was damaged by an accident when it really wasn't. For example, so let me get to the next coverage. So we talked about collision. If you hit something else, comprehensive is if something else hits you. So you had nothing to do with it. A lot of times comprehensive claims will happen when you weren't even in the car. So that's like a tree limb falls on the car. There's a hailstorm and hail damage, all the hail, the ice hits your car and causes, it looks like somebody took a hammer to your car. The car's stolen, the car catches on fire. A shopping cart hits it while you're in a parking lot. That's what's covered by comprehensive, or sometimes called other than collision. So back to the insurance fraud thing, right? There are some people that will make claims on their insurance saying that, oh, something hit my car, because they actually backed into something. But, and there's a difference in the type of claim. So, their deductible for their comprehensive may be a lot lower than the deductible for their collision. And I may say, well, it was a collision claim or a comprehensive claim versus a collision claim. But it happens all the time where people will make claims that were not necessarily legitimate, were true accidents that were really their fault, but yet they'll use the insurance money to collect on that. And again, it costs, it costs millions and millions and millions of dollars to the insurance industry, which translates to higher premiums for you and I. All right, so last coverage I'm going to talk about is, while most responsible people are going to carry insurance, believe it or not, there are people that are driving around that don't have insurance. And what happens if you're driving around and you get hit by somebody that doesn't have insurance, right? So there's another coverage. It's called uninsured or underinsured motorist coverage. Not only are there people that just don't carry coverage, even though it's against the law. By law, everybody is supposed to carry auto insurance to protect against, against hurting your fellow man, if you will. But they can also just have the state minimum. So they might have auto insurance and have the box checked to say, yeah, officer, I do have financial responsibility in auto insurance, but it might be so low that the damages that they cause are more than their insurance will cover. So that's where uninsured or underinsured motorist coverage comes in to protect you. Real world example. So a number of years ago, I had a client that I was doing an evaluation for him. They came to me and their prior insurance agent had them at state minimum liability limits. Not only for their liability, but also for uninsured motorist liability. And I advise them, it's like, hey, Paul, you really may want to think about, raising these going forward just to protect yourself, because you kind of have a little bit of an exposure there. So he took my advice somewhat. He did raise them a little bit. He didn't raise them to the level that I recommended that he did. And 6 months later, he got hit by an uninsured drunk driver, had extensive shoulder surgeries, was out of work, ended up being probably over $100,000 worth of medical bills. And he had the uninsured motorist coverage that he had initially when I talked to him was only $25,000. He did raise it to $50,000. So that saved him, $25,000, if you will, but he was still, on the hook there. He's still paying on $50,000 of medical bills. That wasn't his fault. If he had just raised that liability limit and paid a couple more dollars in premium, then the insurance company would have taken care of that. So does that make sense? All right, so that's just auto insurance. We could spend all night talking about all the different types of insurance for, the coverages on homes and the coverage for life insurance and the coverage for health insurance. So there's lots of details in there. And the next slide I was going to say, so, it's important for you to get smarter about insurance. And the why is, and I say this all the time, because the most expensive insurance is the wrong insurance. Meaning has nothing to do with what company you get insured by, but it has everything to do with making sure that whoever your insurance person that you're dealing with knows what they're doing and is writing the correct coverage. Just like my friend Paul, if he had the higher liability limits that I recommended, it would have saved him $50,000. All right. $50,000 goes a long way, over a little bit more in premium, because he was trying to be what I call, penny wise, but pound foolish. He was trying to save a little bit on premium, but it ended up costing him a lot more in the long run. So that's why I say the most expensive insurance is the wrong insurance. So let's go to the next one. So here's just kind of joking around the difference between, I like to say it's important that you have a good insurance advisor, because there's so much, the devil is in the details. So the difference between an insurance agent is, they want to just give you a quote, where an insurance advisor wants to do a full-blown evaluation for you. An insurance agent is trying to sell you on premium. Hey, look how cheap this insurance is. It's only this much, right? Where an insurance advisor is more concerned about making sure that you're covered correctly. An insurance agent will sell on price, where an insurance advisor will sell on value. And I told you I'm a former engineer, so I'm a numbers guy. So I'm constantly doing the math on, well, hey, does it make sense for my client to have this? Here's what the additional premium is, and here's the risk that they're covering. Does it make sense? Is it worth it? So I'm looking to make sure that they're getting the best value, versus I'm just going to cut the legs out. I'm going to give them the bare bones coverage just so I can, give them the cheapest price so I can sell the policy. I don't know if you guys are familiar with this word, but insurance agents, treat insurance as a commodity, meaning like, hey, everybody's got insurance. It's all the same. I just want the cheapest thing. Where an insurance advisor focuses on service, and then an insurance agent, it's all about transaction. Thanks a lot. See you later. Probably never talk to them again. Where an insurance advisor, wants to have a relationship with you and understand you, because it's important. You're going to have a whole life ahead of you. And you're going to go through all kinds of different, stages where, first you buy your car, and then you buy your house, and then you get married, and then you have kids. And then, so there's, your risks change dramatically over your lifetime. So you can't just go, well, I got insurance, I'm done, because things are constantly changing. So it's important that you got a relationship, with whoever your insurance professional is, and that they know what they're doing. All right. So I blew through a lot of that. It's about 30 minutes in, and I've been talking a bunch. So let me ask you guys, what questions do you have?
I have some questions.
Sure.
So, I guess more on flooding insurance, like for a house that is in a flooded or I guess in a flooded zone versus a house that's not like in a flooded zone.
Mm-hmm.
And from my understanding and And that could be, I don't know. But anyway, so I don't know if is that included in your like homeowners insurance, or is that like additional you're gonna have to get based on if you're in a flood zone or not?
Good question. So, so flood insurance is completely separate from homeowners insurance. It's a whole separate policy. And flood is an interesting animal in that, so there's FEMA, which is a Federal Emergency Management Association, I think. They go through and they do surveys of, the entire country, and they look at the topography of the land and the locations of rivers, and they do all kinds of engineering calculations to see, what are the chances that this area is going to flood. And there are maps out there. You can go to FEMA.org and type in your address, and it'll tell you whether you're in a potential flood zone or what, it'll say area of minimal flood risk, or there's like they talk about the 100-year flood and the 500-year flood, so they'll say, hey, this area is prone to flooding, once every 100 years, or this area is prone to flooding once every 500 years. So, so based on that, or, and then if there's an area of minimal risk, then it's obviously the more risk that FEMA says that that area may flood, the more expensive your flood insurance is going to be. That being said too, so flood insurance can be pretty expensive. It can be almost as expensive as just your homeowner's insurance. And it doesn't cover, it covers basic stuff. It's not going to cover necessarily contents. It's just going to cover your home. So again, when you do the evaluation, you got to ask yourself, well, what are the chances that it's going to flood? And is it worth the cost? If you go 20, 30 years and you're paying, however much, it's again, you're kind of playing the odds. What do you think the chances are that you might actually need it? From a real estate perspective, when I think of it, my wife is a realtor too. For the cost of flood insurance, the additional cost of flood insurance, you could go someplace else that's not in a flood zone and buy a whole lot more house. So you end up paying a bunch of money, that you could put towards buying a much bigger house if it wasn't in a flood zone. But there are some people that, this is my dream house and I want to make sure it's protected, and they'll pay it. But again, you need a good insurance advisor who's going to, talk you through all those ins and outs and go, yeah, if you want to do it, here's what it is. But, look at the evaluation. There are a lot of investors right now that are buying up properties in Chattanooga that are coming out of, New York and California or whatever. And they're trying to buy up a bunch of rental houses. And a lot of them are in flood zones. And usually, once you give them the numbers on, well, here's the insurance on it, but now here's the flood insurance, they're kind of like, well, you know what, I'm not so sure I want to buy that house. Does that answer your question?
It does.
Okay. How about any younger folks? Any of y'all had, or your parents maybe had experience where they had to use insurance, or maybe they had a good or a bad experience because insurance didn't cover what it was supposed to?
Blake, you have a question?
I was wondering, is there an average price for each type of insurance, or does it just depend on which insurance company you're with?
It has less to do with the insurance company than it does with the actual risk. So there are people that work for insurance companies that are called actuaries. And these people are like really super smart math people. And they're looking at all kinds of factors when they're calculating what the premium should be. So, for example, on a home, so the factors that go into a home are Okay, how big is the house? How many square feet is it? What kind of construction is it? Is it a brick house? Is it a vinyl siding house? What's the construction grade? Does it have granite countertops, or is it just laminate type stuff? So there's obviously a higher premium. You would think a higher premium for a $300,000 house versus a $150,000 house. However, believe it or not, I've seen plenty of times where the premium on a $300,000 house is less than a $150,000 house based on location. So if you're in a really high crime area, $150,000 house may be a higher premium than a $300,000 house in a really nice residential area that's got a very low crime rate. So there are lots of different factors that go into it. Now here's another thing that goes into it that we have control over from a personal, and I see this on a daily basis. I saw it yesterday. It was a young lady buying her first house. But your credit rating, right? You all know what credit is? So hopefully maybe Sandy's had someone talk to you about that, but credit is, there are companies out there that will rate people on their credit, meaning, do you pay your bills, right? If you're not paying your bills, the world out there keeps track of that, and they go, and hey, this person, does not have good credit. We can't trust them to pay their bills when they're supposed to. Well, the insurance company kind of keeps, insurance companies, keep an eye on that, and they factor that into their ratings when someone calls in to get a quote. You put their name and their address in. The system, believe it or not, kind of finds a profile on them and says, what's their credit? And if their credit is bad, that actually factors into the rating. So yeah, to answer your question, same thing on cars too, right? Cars is going to be like, well, what's the value of the car you're insuring? What's the driving record of the driver that we're insuring, right? If he's got 3 or 4 tickets versus hadn't had a ticket in 10 years, those are factors that are going to go into there. And that happens. That's nothing that I do. That stuff is all happening in the background. I put in the information, and then the system spits back and tells me, here's what the premium is going to be. So it's funny because I'll get people that'll come to me like, hey, Nick, can you give me a good deal on this? Like I have some special lever that I can pull. Like, what, I really like you. I'm going to give you this special discount. I have no ability to do that. My job is just to make sure that they're properly, insured, give them advice on what coverages are worthwhile, and try to work within their budgets to get them properly covered. But I have absolutely no control over the rate, if you will. Did that answer your question, Blake? Cool. Anybody else? So Katie, I see your last name is Pricer. I assume you're related to Sandy? Okay. All right. Well, that's, again, I could talk for hours and hours about this stuff. There's like the home, the autos are, so I focus on personal lines insurance. So it's home and auto. I do some life insurance and some business insurance. I don't, even though I'm licensed for health insurance, I don't do anything with it just because it's a whole other animal. It is extremely complex. And the laws have changed quite a bit over the past couple of years. So when it comes to health insurance, I actually have another professional that I refer people to. But high level, it's something that as young people, it's not anything to be, I don't want to tell you all this stuff to scare you and panic you, you to go, oh my gosh, there's so many risks out there. I'm afraid to walk out my door. But knowledge is power. So the more the better you are to be able to manage your own personal risks. And, it's again, just, it'll help you make decisions to go, you know what, I'm not sure I want to put myself in that, risk, if you will. And you go, it's kind of a risk reward kind of decision. Because like, yeah, you can do it, but it's going to cost you a lot more. And, when I was young and dumb, I used to do lots of crazy stuff that I don't do now just because, hopefully I know a little bit better. So I was really kind of ignorant back then and had no idea what kind of risk I was putting myself at. Thankfully, I didn't hurt myself too bad most of the time, but the risks were out there. And now I look back and go, gosh, what an idiot I was. So anyway, but that's kind of it in a nutshell. If you ever have any questions, in the future, feel free to reach out to Sandy and reach out to me. I didn't do this presentation to promote me or farmers by any means, but I would recommend that, no matter what you do, try to find a good insurance advisor. And there are a lot more insurance agents than there are advisors, but there are good advisors out there. I'm certainly not the only one by any means. Someone who's been doing it for a while, that you can just tell that they know what they're talking about, versus the guy that's just trying to sell you insurance, if you will. Again, because the most expensive insurance is the wrong insurance. You may think you're getting out and going, man, I'm only paying this much, you're paying that much. And you just got to be really careful, because in the event of a claim, you could end up paying a lot more. So, and that's all I got, folks. Again, if you all have any questions, feel free to feed them back to me through Sandy, and I'll be more than happy to reach out and try to answer them for you. But hopefully that was helpful.
It definitely was helpful. Thank you for your time. I mean, at the age that I am, I've still learned several things that I completely had no clue about. I mean, I know I was paying for it, but I didn't know, I guess, what it actually was for. So I definitely appreciate you taking your time or your evening to educate us.
I'm happy to do it. I mean, I think that's one of the things that I enjoy doing the most is, educating people. Because as I got into it, I mean, I was an engineer. I worked at a nuclear power plant. It's not that I can't understand complex stuff. But, insurance is, everybody needs insurance. And there really is a lot of jargon that the industry throws around, and it makes it very confusing to people. So I just try to, keep it simple and take people there, because, most people aren't dumb. They just don't understand. And so I just try to be, my philosophy is treat all clients like family. And just, try to be their, I guess, their family member on the inside, if you will. You guys probably saw the movie, The Incredibles. I try to be like Mr. Incredible and be that guy on the inside to help them, wade through the waters of the insurance. Because sometimes I got to protect them from the insurance company too, and be an advocate for them and make sure the insurance company is doing what they're supposed to do. So anyway, so yeah, if you guys don't have any questions, that's all I got. But thank you all for your time, and hopefully that was helpful.
Thank
It
you
was.
so much, Nick. Yes, it was very helpful. I greatly appreciate your time.
My pleasure, Sandy, anytime. So if you guys want to do a, insurance 102 follow up, let me know, and I'll go a little bit further in depth.